that was the RBI governor talking about what the MPC has finally decided, and they've decided, as was widely expected in the market, a 25 basis point cut on the repo rate, which has been brought down to now 6% from 6.25 earlier. There's been also a change in the stance of this Monetary Policy Committee. The Monetary Policy Committee had maintained a neutral stance for the last couple of policies, and now that has been revised to an accommodative stance. And the RBI governor went out of his way to explain what this accommodative stance means. It essentially means that the MPC is ready to cut rates if necessary or maintain status quo depending on how the macroeconomic conditions pan out. The RBI governor was specifically clear to mention that there is going to be some amount of domestic growth impact because of the way the tariffs are playing out in the global economy. This will impede domestic growth. That is what the RBI governor said. And alongside that, of course, the GDP growth expectations for FY26 have been revised. For FY26, GDP growth is expected to now grow at about 6.5% compared to 6.7% mentioned earlier. On the flip side, as far as inflation is concerned, the expectation is that for FY26, inflation will be maintained at about 4%, which is, of course, the MPC's target for retail inflation in India. The RBI governor was also clear to mention that while there will be some impact on the broader growth target, there is going to be a lot of fundamental strength in the Indian growth story. Alongside that, the current account deficit is expected to be maintained at manageable levels. Last year, it was done so as well. And this year, that is FY26, it is expected to continue. So these are some positive points that are coming out from the RBI governor's speech. But more importantly, he's acknowledging the fact that there is going to be a growth impact because there is global macroeconomic uncertainty that is plaguing the system right now. Alongside that, of course, he's announced a few measures, most interesting of which I thought were special announcements around the gold loan guidelines. Currently, banks and NBFCs have differing gold loan guidelines depending because their businesses change considering that they are separate entities. But now there's going to be an integrated set of guidelines taking into account the different business models. That is an important one because the RBI has been raising concerns about business practices across regulated entities in the gold loan business. Alongside that, one other thing that was interesting to me is a stressed asset trading mechanism, securitization mechanism, which is outside the current asset reconstruction company system that we have in India under the SARFAESI Act. So this will be something interesting. We'll need to watch out for what exactly the final guidelines say, which we'll, of course, keep reporting on NDTV Profit. But that's it from the RBI's first monetary policy speech for this financial year.